thanks for taking the time to check out the 7-Figure Advisor Breakthrough Accelerator program. This is a proprietary program of VCA marketing where we establish appointments for you on your calendar with qualified prospects interested in exploring tax savings opportunities for their retirement. And what you're going to see today is an actual live call with a prospect from the campaign and one of the agents in our campaign, and Don, our advanced markets guy, who actually helps with what we call tandem selling. In this case, you'll see a little tandem selling in progress and an actual demonstration of in-house developed software to do what?
Well, we call it the tax neutral Roth conversion.
Yep.
So basically what that is that we're taking the prospect from the very worst position that they can be in to a good position, a better position, and even a best position. And you'll see that throughout this whole call where we do exactly that. Now, is it just for annuity sales? Absolutely not. You'll also see that it could be for life insurance sales as well as linked benefits, asset-based long-term care sales as well.
And even AUM.
And even AUM, absolutely.
Yep. So we do lead with our marketing message around taxation in retirement. My suggestion is if any of this sounds interesting after you watch this clip, that you give us a call at 800-356-4189. And ask for your wholesaler.
Basically what you're seeing on the screen right here, I mean, this is just an RMD calculator that I developed. So if you would to do nothing with that remaining $600,000, you know, by the time you're age 73, you're going to have to start taking money out, and then there's tax consequences with that, right? But I already know that, you know, this really doesn't apply to you, but just know that if this were the case, you know, the total taxes for you, and if we have the life expectancy of 90 between now and 90 with just doing nothing and just taking RMDs, you'll have $184,000 taxes based on, you know, the tax rate, you know, keeping your taxes or your taxable income lower. So between state and federal is right around, you know, effective tax rate 19%. And then the balance of this, the $831,000, would go to your kids, and then their taxes would probably be taxed between 40 and 50%. So the burden, it would be totally on them at that point. But again, like I said, you've got that fairly well covered.
Yeah.
And again, this is kind of, I changed this up a little bit because I wanted to suit it more towards what you have going on in your life right now. So you have about $600,000 left to convert. And again, you know, so that RMD taxes, you know, that doesn't apply here. But, you know, with the oil and gas carryover, you know, if you converted $600,000 of that, if you're able to do that right, you know, right off the top, you know, with a 5% annual rate of return, that could be conservative. You know, could be more, but I'm just thinking over long term, you know, at 5%. Your minimum balance would never go below 630,000 based on, you know, this is, you know, from your IRA to your Roth. Balance at 90, if you didn't touch it, if you didn't take any money out, would be, you know, 2.2 million, again, based on that 5% return, right? Now, so this is the way it is right now, currently how you have it set up. What we're suggesting is, you know, putting that balance into an annuity, an indexed annuity, not a variable. You know, it takes it out of the market, and I'll show you why we're using index annuities in a minute. And so with the current state of annuities, right? Because, you know, with the interest rates up, everything's up. They are enticing people to put money into their annuity. So the annuity that we're talking about has a 20% bonus. So immediately your initial balance goes from 600,000 up to 720,000, and still doing that, you know, the oil and gas lease, you know, if you have enough credit to convert all of that over to a Roth, I mean, you can see how your balance has gone up. So I'm just going to do this. So without it, it was 2.2 at age 90. With it, you're at 2.6. The inheritable value 2.6, and at various ages, 70, 75, and 85. You can see that over here on the right-hand side, where the available cash that you have in that Roth account at those ages. So you can just see how that because of the extra bonus, by age 85, you go 1.7 to 2.1. So you're really, you're not hurting yourself by putting it into a fixed indexed annuity. And you'll see this column over here with life premium. So
Right.
what my thoughts were is that if we just did what is called a second to die policy, so that means that you and your wife would be on the same policy, and you'd have money going into that policy. And what we initially said or stated was, well, what if we just put $10,000 a year, only $10,000 a year for the next 10 years? So that's $100,000 that goes into the policy. You can see that your inheritable value goes up by about $350,000. So you're putting in 100, you're getting 300,000 out, all tax-free. So everything, literally all of this in the green, that's tax-free cash. So it's tax-free cash for you to use, or tax-free cash that's going to go to your heirs. So again, if I did this, your tax at age 70 goes from just over 1 million to just still over 1 million, but it does grow in cash, and the cash is accessible to you if you need it. But the biggest thing is, for your kids, right?
Yeah, right.
You put, and we could put in, well, what if we did 20,000, right? Or 25,000, we can see how those balances grow. But initially we just put in, 10,000. So we could literally can customize this. You can be the architect, you can be the engineer, you could design this, however you want.
Yeah.
So, well, very good, very good. So, Timmy, you have any other questions or comments, or is there anything else that you'd like to maybe us change here?
No, I think what you got's as good of example as any. It's plain and simple. She don't need anything too sophisticated to look at it, just mix her up. So I think these look like, simple enough numbers that you can look at it and make sense of it.
Perfect.
Well, hopefully you found that video exciting. My suggestion is, again, if you like what you see and are interested in finding out more, contact ECA Marketing at 800-356-4189 and ask to speak to your wholesaler, or talk to Don or myself. Feel free to ask for either of us as well.
Yep. And one last thing I want to just mention is what you just saw is something that I've done countless number of times, and you saw how easy that was, right? So if that's something that you want to implement into your practice, again, call us or call your wholesaler at 800-356-4189. Thanks so much.
Thanks.